Hey traders, this is Ron Haidt at Market Tamer. Happy July 4th weekend. Hope you guys are doing fantastic. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues shall always be addressed with your financial advisor. Bulls are going to have the edge this week. Between Wednesday and Friday, basically unchanged. Friday did see a bit of a sell-off, but we ended up closing back near the highs of the day. Dow, similar situation, well off the lows, closing back near the highs of the day, essentially right at all-time highs. The Qs, same thing, right back at the all-time highs. And the IWM actually the best. It finished just barely higher, but more than the others. But we're still actually back testing this downtrending line. So going into this week, bulls have the edge. We're above the major moving averages. The strongest remain the diamonds and the spiders. XLF, it's almost getting back to the September highs. With the banks moving higher, that's also good for the indexes. A real quick peek at gold and silver. The GLD here, since its big gap up on the 20th of June, it's now back tested it on July 1st and then again on Friday, July 5th. The 20-day EMA is a great litmus test, line in the sand, see which way the wind is blowing. It's 20 days worth of data, so it's 4 trading weeks. And if we stay above that, the momentum is considered bullish. We get below it, the 20-day trend is over, but we'd still be above the 50-day, right? So the 50-day trend could still be up. That would be my trailing stop if I want to be bullish on GLD. If it gets below, then the 50-day. If it gets below that, well, then the bulls have lost, 2 significant moving averages. If we take a look at silver, it's continuing to underperform and had a bad day on Friday. It gapped lower. It was almost down at the 50-day in orange, and then it closed up, but closed off the lows of the day. But still, this thing lost the 20-day, so the short-term momentum here is over. GDX looks more like gold itself. Again, I'd want to use the 20-day EMA as a trailing stop if I was bullish on GDX. A couple individual stocks here. Here's Abercrombie and Fitch. This thing was at $30, $15, not bad. In less than a month and a half, gets a 50% haircut. But ever since the volume started coming on the 13th, we're starting to see equal or higher up days in height and quantity, meaning there is more up day volume than there is down day volume. Now we've gotten above the 20-day. We've taken out the previous little mini swing high here. The target would be the gap down around 1950. Then there's some coagulation, if you will, confluence. The 50-day in orange, the 200-day in purple, both institutional based. So right around here, 1950, then to 21, above 21, then we go to a gap fill. If I was going to use a trailing stop, I would consider basically the intraday low from back on the 3rd, which would have been Wednesday, and that was 1569. So interesting. Abercrombie's making a turn. Not saying it's going to go back to new all-time highs, nothing like that. It's just from a momentum perspective. If you're a bear, you just close above the 20-day. Volume's been picking up on up days. You've been put on notice. It is no longer short-term bearish. Here is MAXR, something I just randomly found. MAXR Technologies. You might say, what do they do? I have no idea. But from a technical perspective, this one got my attention. Stock, for what it's worth, was at 50, and then it goes to 5. Talk about chopping a zero, right? But if I zoom in, let's just start from here. Look at how the volume is spiking. We get above major moving averages. We haven't been above the 50-day in months. We get above on a spike in volume. Back test the 20-day, back test the 20-day. Then we lose the 20-day, but hold the 50-day. And the moment we get back above these moving averages, volume returns. So when I look at this picture, I see this rising volume coming in. We've even taken out a previous little mini double top around 875 or so. Now it's a buck higher. I mean, even on the 2nd, it broke out. So if I zoom out and I say, where are the upside targets? This is where it gets crazy. Just because the 200-day is a major institutional moving average around 1167, that would be a target, almost $2 higher. Then you come all the way up here to around 20, which is what the gap down occurred. Not saying it's going to get there, but from a purely technical perspective, man, that is really interesting. And here's Rite Aid. Look at that volume pop. That got my attention too. So if I zoom in here, we blew through the 50-day back on 627. We're bull flagging, and we just popped out of it on Friday. Upside targets. This thing has just been such a death spiral. I mean, 1250, a third higher, 30% higher. That's pretty crazy, but that's what we're looking at technically in the 200-day. So MAXR and RAD and Abercrombie, 3 new stocks to keep on the watch list. That is it, folks. Wish you a fantastic week ahead. I'll see you tomorrow.